It's a question I get asked time and time again as a self-employed business that is a sole trader or partnership that is not incorporated. What expenses can you legitimately claim through your business that gives you income tax and national insurance relief? In this video, I'm going to cover what do I mean by tax deductible or allowable expenses, how much is it worth to you and your business, the wholly and exclusively principle, common tax deductible expenses themselves, HMRC simplified expense checker, record keeping, and finally, how to claim these expenses on your self-assessment return. Now, if you're in the thinking or planning stage of starting as a self-employed business, then go and watch my video on sole trader versus limited company, 5 benefits of each and how to decide. A useful and informative watch that will definitely help you make an informed decision as to which way to go. So your self-employed sole trader or partnership business will incur expenses, essentially money your business pays out to suppliers, professionals, software providers, and so on in the ordinary course of your business. So firstly, from a commercial point of view, your business needs to incur these expenses in order to practically keep it going, to be able to provide whichever products or services that you do in order to earn revenue, that is money into your business. And secondly, these expenses can either be tax allowable or non-tax allowable. There is this misguided assumption that if you have to incur costs in a business, you will automatically get tax relief on all of them, but that is not the case for all types of expenses, and that is where the concept of wholly and exclusively is important for you to understand, which I'll explain shortly. Let's examine this with a simple example, as I always make a point that you need to know your numbers and how material it is to you financially before perhaps expending your time and energy to go into more depth. Ultimately, what is the value to you? So let's assume your self-employed sole trader business's accounting year is from the 6th of April to the 5th of April, which is very, very common indeed. And you generated the following figures. There's annual revenue of £80,000, tax allowable expenses incurred of £30,000, providing trading profits of £50,000. As a result, your tax calculation looks as follows. Income tax after deducting a personal allowance of £12,570 at 20% is £7,486. Class 4 national insurance for the 21-22 tax year, as an example, is payable on any profits between 9,569 and 5,270. So in this case, amounts to 3,639. For now, just to keep things simple, I'm going to ignore Class 2 national insurance and any other applicable allowances. So your total tax and national insurance bill is £11,125, and your disposable income, that is your take-home pay, is £38 in this example. Now, imagine if the £30,000 of tax allowable expenses was taken away, as they no longer are classified as tax deductible expenses. Then your declared profits increase to £80,000 and your tax and national insurance bill goes up to £23,666 and your disposable pay goes down to £26,300. So the delta, that's the difference, is quite significant in this scenario, as on average for every £1 of expenses your business incurs, you can save anywhere between the amount shown on screen of tax and national insurance as a decent guide, but obviously it's dependent on the level of your profits that you declare in a year. So hopefully now you can visualize by knowing your numbers how beneficial a legitimate claim for expenses can be for your financial wealth. But don't get things the wrong way around here. Don't just go and incur expenses for the sake of saving some tax and national insurance, but if they are valid commercial expenses, for example, to operate or enhance your business, then a good understanding of the guidelines will assist you at the point you need to decide as to whether to incur a particular expense or not. This is a really important principle that is worth you understanding as a self-employed business owner. You see, there is no prescriptive list that HMRC will publish as to what expenses are tax allowable and even those that are not. So it all comes down to whether the expenses you are incurring are wholly and exclusively for the purpose of your trade or business. And the key words here are wholly and exclusively. So, for example, one self-employed business could have spent, say, £10,000 on clothing items, and it is allowed as a tax allowable expenses because it was incurred wholly and exclusively, whereas another business could have done likewise on clothing items and it is not tax allowable. And there could be a few reasons for this. For example, the clothing could have had a duality of purpose, or it could have been everyday wear as opposed to uniform, costume or protected clothing, thus under the wholly and exclusively principle rendering it not allowable for tax. So you can go to more depth on this particular expense in HMRC's Business Income Manual, that's BIM 37910, where they set out the principle and historical case law to support. For this section, I put together a tidy and handy download for you to take away that lists out all the most common tax allowable expenses and also examples of expenses or circumstances when it is unlikely your business expense will be tax allowable. A link is in the description box below where you can head over and download this now completely free. A very useful tool HMRC provides is a simplified expenses checker for your self-employed business. And the basic premise is that for the following common allowable expenses, that is business costs for vehicles, so typically your vans, cars and other vehicles, working from home and living on your business premises, you can use flat rates to ease the administrative burden of reporting. By the way, living on your business premises relates to businesses like guest houses, B&Bs, where you actually live on your business premises. So HMRC allows you to select between a flat rate or use your actual expenses if these are higher and more material. You can head over to the tool and have a look, and the link is in the description box below. I am in the process of producing a separate, more in-depth video on simplified expenses, as it is a method that can drastically reduce your admin and thus save you time, energy and pain. So hit that notification bell to get an update when I do release it very soon. Now, it goes without saying that sufficient record keeping is paramount to evidencing your expenses. And if your self-employed business is ever audited by HMRC, and it does happen, then you will definitely need to show invoices, receipts, and possibly even bank transactions to prove tax deductible expenses you are claiming, especially the material higher numbered ones. What I strongly recommend, and if you're not already doing so, is to use a reputable piece of accounting software such as Xero or QuickBooks, and an expense capture software such as Xero's HubDoc or even Receipt Bank. Most receipts and invoices are now digital, but if you do have paper receipts, take a pic and get them uploaded as you go along. So for your self-employed business, the process of claiming tax relief on your expenses is when you essentially file your self-assessment tax return. This is where it's all done. And typically you'll do this at some point from the end of the tax year in question up until the 31st of January deadline for any tax year. So in your self-assessment return, there's a section called self-employment. And if your turnover for the year was more than £1,000, then you need to declare your revenue and allowable expenses. So for your allowable expenses, you can either declare these as a single total value and then enter your total expenses in the total allowable expenses box as shown on the screen, or you can opt to declare your total allowable expenses on a line-by-line basis ranging from car, van and travel expenses all the way through to other allowable expenses. From my own experience and with that of my own clients, my team and I often opt to complete this section line by line and provide a little more transparency to HMRC. We found statistically it resulted in fewer compliance and accuracy checks by HMRC. If you want to go into more depth with self-assessment, including self-assessment for the self-employed, then head over to my membership area, the Accounting and Tax Academy, where we have some great courses that will break this down for you. This is Tony D'Angelo for the Accounting and Tax Academy. As always, thanks for tuning in.